Trump appoints a pro-crypto advocate to lead his economic council. Could the United States use Bitcoin as a national reserve? We take a realistic look at the pros and cons. Stephen Miran, a cryptocurrency supporter, has been named by Donald Trump as the chair of the Council of Economic Advisors. Could this be a turning point for U.S. crypto policy? Let's break down the good, the bad, and what might be coming next. Stephen Miran is well known for his favorable stance on cryptocurrencies and his interest in creating a more flexible regulatory framework. With this appointment, Trump seems to be sending a clear message. Cryptocurrencies could play a more significant role in the U.S. economy. Let's start by analyzing the advantages. First, there's the boost to the crypto sector. With Stephen Miran leading the Council of Economic Advisors, we could see a more favorable regulatory environment for cryptocurrencies. This would make it easier for new companies to enter the market, driving technological innovation and attracting more investment to the blockchain sector. Startups and crypto projects in the U.S. could benefit from incentives and greater legal clarity. Second, we have global leadership. In a world where countries like China have taken restrictive stances or developed their own digital currencies, a pro-crypto approach in the U.S. could position the nation as a leader in blockchain adoption and regulation. This wouldn't just benefit local businesses, but would also strengthen the U.S. economic influence on a global scale. Finally, there's increased legitimacy for cryptocurrencies. An appointment like this sends a signal of confidence to the crypto ecosystem. By incorporating it into economic policy, cryptocurrencies could gain greater acceptance among both traditional investors and everyday citizens. But not everything is rosy. There are risks and challenges to consider. First, there's political and financial resistance. Even though Miran supports crypto, many in Congress and traditional sectors of the financial system remain skeptical. Banks and regulators could block or slow down progress, citing risks like money laundering, tax evasion, or the loss of control over the financial system. Second, there's public credibility. Despite its growth, the crypto industry still carries a stigma tied to speculation and scandals, like the collapse of FTX. These challenges could limit how quickly the U.S. can embrace a pro-crypto stance. This context could make it difficult for a pro-crypto policy to gain the necessary support from both the public and lawmakers. We also have to consider international tensions. A more aggressive approach toward cryptocurrencies could increase friction with other countries. For instance, China has already restricted cryptocurrencies and actively promotes its digital yuan. U.S. leadership in this space could escalate technological and geopolitical competition, bringing with it diplomatic risks. Lastly, there's volatility and uncertainty. Cryptocurrencies are highly speculative assets. One wrong move, such as overly permissive or poorly implemented policies, could trigger financial bubbles or create security issues in the markets. Miran's appointment could mark a turning point, but the real impact will depend on how these ideas translate into concrete policies. Will this be the boost the crypto world needs or just a symbolic gesture? Recently, there's been growing discussion about the possibility of the U.S. including Bitcoin in its strategic reserves. This idea has gained traction thanks to proposals from political figures like Senator Cynthia Lummis and President-elect Donald Trump. Senator Cynthia Lummis recently introduced the Bitcoin Act of 2024, which proposes that the Treasury and the Federal Reserve acquire 200,000 Bitcoin annually over 5 years, totaling 1 million Bitcoin. This plan aims to use Bitcoin as a hedge against the dollar's devaluation while strengthening the financial position of the United States. On the other hand, Donald Trump, during his campaign, promised to create a strategic national reserve of Bitcoin. His goal is for the United States to control up to 5% of Bitcoin's total supply. This promise has contributed to the recent surge in Bitcoin's value, which has now surpassed $100,000. So, Bitcoin as a national reserve, revolutionary idea or economic utopia? Let's dive in and analyze it. But first,
welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
Is it really viable? What implications would it have for the global economy? Bitcoin has evolved from an experimental idea to a globally recognized asset. The proposal in question suggests that the United States, one of the world's largest economies, incorporates Bitcoin as part of its strategic reserves, similar to gold reserves. But why is this idea emerging now? In a context of rising inflation, geopolitical tensions, and declining trust in traditional currencies, some see Bitcoin as a tool to diversify risks. But what would this mean in practice? To understand it, let's break down the advantages and disadvantages of this idea. There are 3 key points in favor. First, scarcity and long-term value. Bitcoin has a maximum supply of 21 million, making it a finite resource much like gold. This could help protect the nation's reserves from inflation and the dollar's depreciation. Second, decentralized resilience. As a global asset not controlled by any government, Bitcoin could serve as a hedge against geopolitical instability or financial collapses. Third, legitimacy and global leadership. If the U.S. were to adopt Bitcoin as a reserve, it would solidify its role as a financial leader and could inspire other countries to follow suit. pursuit, strengthening its strategic position. And what about the drawbacks? Here are 4. The first is extreme volatility. Bitcoin is a highly speculative asset, and its value can skyrocket or plummet within days. We all know this, and it makes Bitcoin unreliable as a stable reserve. What would happen if its price were cut in half after a government invested billions? Just think about that for a moment. The second drawback is the lack of clear regulation. Despite its growth, Bitcoin still lacks a global regulatory framework. This creates legal and operational uncertainty, especially for a government entity. The third issue is its environmental impact. Bitcoin mining consumes significant amounts of energy, which could contradict the U.S. efforts to lead in sustainability and renewable energy. Fourth point, political and social resistance. In a financial system dominated by the dollar, integrating Bitcoin could be seen as a threat by certain traditional political and financial sectors. So, is it possible for governments around the world, including the United States, to use Bitcoin as a reserve? The reality is complex. While some countries, like El Salvador, have adopted Bitcoin, they've done so under very specific circumstances with mixed results. For major economies like the United States, adopting Bitcoin would not only require a monumental cultural and financial shift, but also involve risks that could destabilize their economic systems. Bitcoin has potential, but its volatility, lack of regulation, and technological dependency make it a less viable option in the short term for most governments. Still, the fact that this idea is being discussed is a clear sign of how cryptocurrencies are reshaping the global financial landscape. In our opinion, in the short and medium term, it's unlikely that major governments will adopt Bitcoin as a strategic reserve. The primary reasons are its extreme volatility, the lack of regulatory frameworks, and the resistance of traditional financial systems deeply integrated with fiat currencies. However, in the long term, if Bitcoin achieves greater stability and global regulation, it could become an interesting option as a complement to traditional reserves, particularly for smaller or developing nations looking to diversify their assets. Now, tell me, what do you think about this? Let me know in the comments. And if you enjoyed this news analysis, give this video a like, subscribe to the channel, and hit the notification bell so YouTube lets you know about future uploads. Don't be misled by hype and misinformation. Join the right path. See you next time, and Merry Christmas.